In this video, we're going to look at a simple trading strategy using price action to try and find buying opportunities in various markets. Hello, I'm David Jones from Capital.com, and this is one of a series of short videos we're doing looking at simple trading strategies. Now, I think there's maybe the impression amongst people once they start trading that trading has to be complex. You have to have lots of indicators, moving averages, algorithms, all of this sort of stuff. And it doesn't have to be that way. You know, you can have some very basic and simple trading strategies, and that's what these videos are all about. So we're going to start off by looking at one example of using price action. You know, clearly markets move about, they set highs and lows during the day, and if we have a market that's clearly trending higher, then previous lows are really important. You know, if we saw a market sell off to, let's say, 5,000 yesterday, then bounce up to 5,100, clearly at 5,000, there was a change in sentiment. You know, this is known as support when we're talking about charting. So when a market moves back to previous support, it can be something of a buying opportunity. I think the best way of illustrating this is to look at an example. So I've got an hourly chart of pound US dollar. Let's take a look at what I'm talking about when it comes to buying when a market moves near a previous major low. So for the purposes of this example, let's take a look. We've got the pound against the US dollar here. We're looking at an hourly chart. This is from September the 4th is where we start through to September the 11th. So each hour represents, each candle represents an hour worth of trading. So what we're looking at really, clearly the market's been moving higher, but we're looking at buying into weakness and looking for it to hold ahead of previous major lows. There's an obvious example here. Let me just use the line drawing to pick up on this. So we had back here, the 5th of September, it's at 4 o'clock in the evening, the market sells off. It moves a little bit higher, and it's this sort of move here that we're looking for. So this is on the 10th of September. So this was, 5 days later, we saw the market sell off. 128.70 was the low, near enough. The market moved to 129, so within 30 points of that low, and we saw the strength come in. Of course, it's not going to hit the same level every time, but we're using this as a reference point for where buyers came in last time. We're looking for strength in this example ahead of that level and looking to have stop losses beyond. So let's jump forward in time. So we're here. So we've seen the market push up towards 130.85, has sold off down to 129.65. So that's it's a half decent turnaround, and we're left with this low. So applying the same principle again, we're going to be watching this level moving forward. So we're going to keep an eye on 129.60. If the market sells off from these highs, so turns around, we're going to look for strength coming back in, look to be a buyer. That's our trading strategy with stop losses below. Let's jump forwards in time. We've jumped forward here. So that low was set on the 11th of September at 1 o'clock in the afternoon. The next day, 12th of September, between 11 and 12, the market sells off again towards this low, gets as low as 129.80. So it comes within 15 points of the low, and we see some strength. We're saying that we don't expect this low to be taken out. So maybe we have a stop loss at 129.50, 129.40, wherever it is. This is our simple trading strategy. The market is in an uptrend, so we're buying in the direction of the trend. Let's jump forward again. I've jumped forward a couple of days here. So this was our buy signal around about 130. The market did run a lot higher, around about 140 points higher from bouncing off that old support. So here we would have maybe trailed our stop loss up, or maybe just taken profit somewhere on the way up. But hopefully you can see the principle here. It doesn't need to be complicated and massively involved. And if we're looking at, in this example, buying into an uptrend, then looking for weakness towards a previous major low that really stands out, as this one did and as the previous low did, looking to buy if we see strength ahead of that with a stop loss the other side of the level, and then giving the market time to see if we see the buyers come back in and the price get lifted as it did from here. It's not going to work all the time, but we have our stop loss in place if that level gets taken out, so we come out for a small manageable loss. So as I said in the example, it doesn't work all the time, but that's why we have stop losses. But you can see there are a couple of occasions there just over a week and a half or so, where for pound US dollar, because we had this strong trend selling off towards a previous low, set up a buying opportunity. The chart we were looking at was an hourly chart, but you'll also see this sort of setup happening on shorter term charts like 5 and 10 minute charts, and of course longer term charts like daily charts. So if you're struggling to maybe find opportunities in markets, then I think looking at this idea of previous support levels is a great place to start from, not least because it gives you a definite level as to where to set your stop loss. Next time round, we'll look at a different approach, but of course, to never miss out on the content that we produce, make sure you're subscribed to the channel. If you have any questions about what I've covered, leave us a message in the comments down below. We do read them all. And of course, if you like the video, click on the thumbs up and it helps us reach a wider audience. But for this brief look at a simple trading strategy, we'll wrap things up there. So from me, David Jones and Capital.com, I hope you found it useful and good luck with your trading.